Yo, what's up, y'all? I made a quick little PowerPoint here for y'all called Risk Management. It's a high level guide to protecting your capital. Let's go ahead and get started. The introduction to risk management. Risk management is the foundation of long term trading success. It is about preserving capital, not chasing your profits. Even with a high win rate, if you have no risk management, an account can still be blown. You gotta learn to be a good loser, and you'll last long in this game. So here's a little table on risk to reward ratios. Usually, me and Waylon, we like to keep we aim for a 1 to 2 RR. So we're in this percentile right here. Obviously, if you're higher, you're way more profitable. But what does this mean? Usually, if I'm risking, I want to risk $10 to make 20. So if I'm going in with $100, I want to make 200, so on and so forth. I never want it to be 1 to 1. I never want to go in a trade saying, okay, I'm risking $100, but I'm comfortable making $100. Yes, you can be comfortable, but if you're 1 to 1 and you have a 50% win rate, you're still break even. If you're lower than 50%, that's it. You're not profitable. You have to be at a 60% win rate to even be profitable with a 1 to 1 risk to reward, which is pretty hard to do. With a 1 to 2 ratio, you can drop down to a 40% win rate and be profitable. Once you hit that 30 and 20%, then you start to fall into that not profitable. Usually, most of our trades are 1 to 2 and higher. We usually hit around this 1 to 3, 1 to 4, and we have a pretty high win percentage. I would say about over 50%. So this puts us over here in this little quadrant. Profitable. Even with the 1 to 4 risk ratio, and you're at 20% win rate, you're still break even. That's hard. So usually you got to stick around that 1 to 2, 1 to 3 with over, I would say, a 40% win rate. Here you can have a 40% win rate, but if you follow the 1 to 2 rule, then you will not be profitable. So here's a quick example of a 1 to 2 RR trade that I took a while back. So this is PLTR. We have this break above 172. We get this nice, strong, super strong close. We come up here, up into this 175 area, and we finally get that pullback. As we're getting that pullback, I'm looking for this 172 area to be my entry. Once I see we get these wicks here is when I enter my position. Because now I know my risk is right below these wicks. Down here, you can see I put it up for us. My entry is, we can go to this. We can go ahead and go to the trade cell. I'll pop it up. Here it is. Let's go ahead and go to where I entered. Right here. So this is the 1 minute time frame. We get this strong push above 172. How do we get this 172 level? Previous rejections here in this pre-market. Previous rejections here. So now I know, okay, this is a level that I want to be watching coming into the day. If we break above this, I'm looking for this retest. So now let's go back to my entry. So boom, we get this break above, strong close. This is all within 5 minutes of the market opening. 5 minute candle closes right here. So this next 5 minute candle, it opens right here. We start to reject this 175 level, and we're making this pullback, which is what I'm looking for. As we come down into here, I see momentum start to slow down. Wicks start happening, and I enter at 946, which is this candle here. We've made our first wick. We bounce up. So initially in my head, if I'm entering this, 171.80 would be my stop, but I give it a little bit more room so I'm not liquidity. So I drop it down to 171.65 is what I have it at here. So we get our first pop. Okay, I see it happening. I know this level is strong. We come back down. We take out this wick and we start wicking again to the upside. So now my risk is really defined. This is as soon as we enter, or as soon as we come back up back above 172 is when I enter my position. I enter with 3 contracts right here because I know my risk is defined. A stop under 171.65. So if I hover over this, my entry was 172.25 and my risk was 171.65 with a target of, honestly, it was 176, but as we got back into this 175 level is when I started to take my trims. So here, 175 is right there. So this is a trade that I took. This is a 4-to-1 R. So if we go back to the PowerPoint, let me go back to the PowerPoint. This is a 1-to-4 R. My win rate is above 50%, so this puts me in the profitable, right? So we can see here, we have a 1-to-4 R on this trade. Entries here, 172, 0 drawdown. As soon as we get in, we rip. We come up, we have a strong 1-minute candle on this one, and we're just free flowing all the way to 175. No type of drawdown, no nothing. So as we're coming into this previous day's high, or this day's highs, is when I'm starting to look for my trims. I know my risk is, or I know my risk to reward is 4-to-1, so I know I'm in the right trade as of now. I'm not letting this trade go red or go against me at all. So as we come up into this 175 is when I'm starting to take my trims. We start that momentum slowing down. My first trim was right here at 953 as we come into these wicks. Then I hold runners for this 175 level, and that's when I took my last trim, my full sell. We did eventually keep going all the way up into this 176. But the main idea is this risk to reward. What was I risking for my reward? I knew my risk was below this wick. Give it a little grace, give it about 10 cents, and my reward is way up here. This is a perfect trade. Perfect trade. So now let's go on. And this was the here's the contract chart. Here's the contract chart. My entry was 149 on these cons, and I was risking it down to 125. And we full sold these cons at around 242. So that's perfect. Here's risk allocation. A+ setups versus my mediocre setups. Certain setups require different types of risk. Typically in A+ setups, I like to put on more size while still being able to keep my risk in check. This can mean having tighter stops in place. An A+ setup for me will usually have to have at least 3+ confluences, and those confluences are: we broke a key level of support and resistance, we have a full body 5-minute closure with volume back in it, we have VWAP and EMAs that are at or near the pullback level that I'm watching, or the zone. My mediocre setups will have less than 3. And if you do decide to try it out, the best way to approach this is to have less size than normal. You don't want to go into a mediocre trade with your regular size. Why? Because it's a mediocre trade. It's your B's, it's your C's, it's your A minuses. You don't want to go in full size on these trades. There's no reason to. If you want to try the setup, you can try it, but go in with less size. You're risking less. You can have wider stops with less size, but you must respect your risk. If you don't respect your risk, then why are you even trading? You know what I mean? If your stop gets hit, stop out. If you can easily get back in if we get a re-entry, right? So here's a setup like that. A setup like this is a risk-on trade for me. This is an example with 3+ confluences. So we have this is on Google on the 5-minute chart. We get I have my level of 197.75, right? So what is this? This is a full body 5-minute closure with volume back in it. Okay, yeah, this is the first 5-minute candle of the day, but we know every single 5-minute candle that starts the day, it has strong volume, right? We have our VWAP and EMA at or near the pullback level. This is our 8 EMA right here. AEMA is lined up perfectly with this 197.75, which is our third confluence. Broke key level of support and resistance. So what am I doing? I see this break. I'm then waiting for this pullback. As we get this pullback, we show our confirmation. Same with our PLTR trade. We wait for these wicks to happen. As we start to wick back above our level is when I enter. Why? Because I know my risk. My risk is right below this wick. Give it a little grace. We'll keep it at 197.70, 197.50, or even this level right here. You could even put it at the bottom of this wick, or at the bottom of this full 5 body, because it's not that far, and we know our reward. So I'm comfortable with this. I'm comfortable putting it below this. This is around, can't see it, but it's, I would say around 197.15, 197.20. So as we get our wick, we start to climb back above 197.75. I take my entry because I know my risk. We then get this full body bullish engulfing that covers this entire candle, covers the entire candle, and you can see my entries here. We come down, I get it. As we're coming back above 197.75, I then add. So now as we're pushing up is when I start to take my sells. So this is an example of a risk on setup for me. We have the full body 5 minute. We have our level of support that we broke up, or our resistance that we broke out above. So here's a daily risk limit. You never want to risk more than 2 to 5% of your total account balance in a single trading day. Why? This will protect you from the red days. Yes, they do happen. They come. We're going to have them. There's no going around it. And will still allow you to be able to recover from them, keeping it manageable. So for example, if I have a $5,000 account, my daily risk is around $100 to $250 max. So if I take this trade on a $5,000 account, I'm going in with around $1,000 position size, right? I don't want to risk more than this. $1,000, 10% of $1,000 is $100. This trade right here, if we break below this is around, I would say, it could be 10%, 15%. We don't know because options are very volatile, right? $250 max. This is not, you're not losing $250 on this trade if we break below this. Unless you're trading 0 DTEs. If this is a Monday or Tuesday setup, you're not losing $250 max on a $1,000 position size, right? So on a $5,000 account, my daily risk is $100 to $250 max. Here it is. $5,000 account, a 3% loss is $150. So we still have 97% of our account remaining, $488.50. We can keep trading, or we can wait for the next day, take a better trade, recap, do what we got to do, come back into the next day, and we can make this back, right? We can make this back on easily. So you want to avoid goal-oriented trading. What does that mean? Do not enter a session with the mindset of, okay, I want to make an X amount of money today. What this does, it messes with you, right? Let's say I come into today and I'm like, okay, I want to make $200, right? I go in with my $1,000 position size. Boom. We get this. Let's just say this fails, right? We fail, we break back below this. I'm stopped for the day. Let's say it's this $150 loss. So now what am I trying to do? I'm trying to scramble around, look for more trades to try to get myself back to that $200 winning day. Because I came into the day saying, okay, I want to make an X amount of money today. No, that's not what we do. We go into the day thinking, okay, if this setup comes about, we take the setup. If it hits our stop, we stop out. That's fine. We look on for the next setup. But what do? We keep our risk in check. Don't come into the day saying, I'm going to make this much today, because you're not going to, right? You never want to do that. You want to focus on the quality setups, and the money will eventually follow. I can be 99% sure that if you come into each and every day saying, okay, I'm going to take the same setup, the same break and retest strategy that I've been taught. I'm going to take it every day. If I don't see it, I'm not going to take it. You will be profitable. Trust me, you will. A setup like this happens pretty often, quite throughout the week, right? When markets are flowing, markets are trending, you're gonna catch a trade like this easily. So you want to focus on those quality setups. The money will come easily. Goal-oriented trading leads to forcing trades, trying to reach a certain amount, unnecessarily increasing your risk, and emotional trading. So what does that mean? Let's say I'm coming into today I want to make $200, all right? I'm down $100 on the day. So now what do I have to make back to get back up to my 200? I'm going to increase my risk and I'm going to start emotionally trading, which is the worst case scenario. This is when the tilt comes in. This is when you start adding your size for no reason. Start taking mediocre trades, your B plus trades, your B minus trades, even your A minus trades. This is when you start taking those. There's no reason for it. Why? Because look how much of our account we have left. 97% is what we have left. We took a 3% loss on the day. Fine, cool. It's a Monday. We can make this back, right? We can make this back easily. There's no reason to be trying to reach an X amount of money. There's no reason to unnecessarily increase your risk, and there's no reason for emotional trading, right? If you get caught in this emotional trading, then just decrease your risk. Instead of going in with 1,000 here, go in with 500, right? Go in with 500. You have less risk on the table. So now it's like, okay, I'm a little more comfortable in this trade. I understand what's going on. I know what I'm looking for, right? No reason to be emotionally trading. So here are some key takeaways and some best practices. I want you to always aim for a 1 to 2 risk to reward trade. If the setup has 3 plus confluences, don't be afraid to put on some size. Only if you're comfortable with it. You know what I mean? If you're comfortable with it, go ahead and try 1 more contract, 2 more contracts, $200 more on the size. It's fine. As long as you know where your risk is at, there's no problem with it. If you're comfortable holding to where your stop is, there's no problem with putting on some size. Now it becomes a problem when you're putting on size on mediocre trades, on your B plus trades. There's no reason for it. I want you to build a trading plan before each trading session. Review your plan at the end of the day. So coming into this day, I knew what I wanted. I already had my levels, right? We break out. This is when I turn on my AEMA, my VWAP. This is when I turn this on. Because I already had the plan of, okay, if we break above this, we get the pullback, I'm taking it, right? Be comfortable with starting small. For beginners, 1 to 2 contracts is more than enough. There's still days where I'm going in 1 to 2 contracts. Why? Because maybe I'm not comfortable, maybe I've been on a slump, right? It's okay to start small, to go back to being small. You're just getting your reps in. You're getting your reps in. 1 to 2 contracts is more than enough. You can catch a banger trade with 1 to 2 contracts. The last one, which is honestly probably the most important one, never ignore your stop loss. Remember, being a good loser will keep you in this game for a long time. Never ignore your stop loss. If you ignore your stop loss, you got to climb back a really tall mountain to get back in the green, get your account back, whatever it is. So remember, being a good loser will keep you in this game. Sticking to your stops. Stopping out as soon as it hits your stop. You know what I mean? You lose, the next trade you had planned doesn't come about. Okay, fine. Move on to the next day. Let's go into that night. Go ahead, chart what I got to do. Go over my trades and move on to the next day. Next day can be a banger and bring you back green. You never know. And this is all that I have for today. So I'll go ahead and get this posted up, get you guys on this, and I hope you guys enjoy your day. Have a good one.